Hello everyone, welcome back to my channel. My name is The Trades, and today, after long period, I was out because I needed to work on some other businesses, but unfortunately I was here all the time inside of my Discord. As you guys can see, my students are loving it and they are winning all the time. Also, I'm so glad to see their kind of trading and helping them to improve in their strategies. One thing that I want to say is thank you very much for 300 subs. Of course, this is big motivation for me. Yes, I was out. My last video was a month ago, but as I can see, this video how to open a broker trading account basically flew and made 4.8k views, which is basically so good to see. Anyway, I will be right now consistently posting once a week, so just to let you know, be prepared to see once a week my new video. Of course, if you have anything that you want to be, for example, explained, give me like inside of comments example what would you like to be explained. What I will be talking today is liquidity, and pretty much simple type of liquidity because people like to exaggerate things and I like to keep them simple, and this will be everything you need to know about liquidity. So let's just move on and teach you what liquidity is. So what is liquidity? I will be opening my trading view. Okay, so I will be showing you on trading view examples. First thing is first, what is liquidity? So liquidity in trading is all about where price is drawn. So you have your chart and you are drawing your liquidity. So it's either pulling towards buy stops above highs, which we call buy side liquidity. For example, this high, and I will just type buy side liquidity. Okay, so this is a buy side liquidity, or how people are saying buy stops above highs. Now, second thing is so sell stops below lows, which we call sell side liquidity. For example, this one or this one or this one. So the point is you cannot think that every low and every high is the best liquidity. Yes, it is liquidity, but it's not saying that is best liquidity, that it's gonna be taken or not. So how you can move with it? As you guys can know, you have swing highs and swing lows. So basically this is swing low, swing high. Now what you are gonna look in swing high and swing low, or what do I look in swing high and swing low while I'm looking for liquidity? So first of all, I will just mark this one and I would say this is the buy side liquidity. Now you can say that I place this as buy side liquidity because I saw here that was taken blah blah blah, but it's not true. The reason why I took this one for example is because every time when you see high, look for 3 candlesticks. So three pattern candlesticks. So first one must be like with wick, second one must be hard, the middle one must be the highest of both, and third one must be lower than middle one. For example, as you guys can see, just to point it out, for example here we can see that we have this high and we have this high, but this one was the highest. So for us this is liquidity. First was made, then second was the highest, and third was trying to pick up this liquidity, but it not succeed, and then just move down, and that's it. So basically that's how I look liquidity, which for me it's correctly and basically work pretty fine. And then we can see sell side liquidity. For example, same thing. I will just type sell side liquidity. I don't know how to type. Oh my god. All good. Anyway, same thing is here. You can see here three lows, first low and second low. So for now there is a thing. So you can see the middle one still the lowest or the highest, and first and third one is lower. And you can see that this is perfectly a sell side liquidity, and it was executed, and as it says, sell stops below lows, which is sell side liquidity, and then it moves in other direction. So these swings attract stop orders like liquidity. Above highs is a buy side, below lows is sell side. Think of price like a magnet. So basically it's attracted to where orders are sitting. So as you guys can see, first order was made on sell side liquidity, and we took that first. Then we see buy side liquidity, then we took this one. Now let's move on and explain other things you need to know about liquidity. This is not all, but it's pretty simple. As you now know what is buy side liquidity and what is sell side liquidity, of course there is more, which I usually break, or every trader breaks, into two categories: IRL, which is internal range liquidity, or ERL, which is external range liquidity. What is the best, or what is the main? For me, both are main, but the mainest was ERL. So ERL is defined by swing highs and swing lows. It can be all lows or all highs, depends which system or which strategy you are using. So these are external targets. For example, buy side liquidity, for example, sell side liquidity. That's this is for me the mainest point, or the mainest goal to reach till sell side liquidity, or to reach till buy side liquidity. What is the second category, which is internal range liquidity? It's basically a range, like inside the range, defined by fair value gaps. For example, we took the buy side liquidity, which is, I will just point it out, ERL, and then we are looking for internal range liquidity. I would say acts as rebalancing zone, or because once ERL is taken, price tends to draw back to IRL, which is FVG. So as you guys can see, we took ERL and then we are looking for FVG. Now what you can do is go on lower time frame, such as 3 minutes, 5 minutes, depends how you want to play out. I really don't do anything. I'm always waiting for rebalancing zone. So right now we are going to go, for example, down into our FVG, and from FVG to the next ERL, which is this one. As we spoke, we have 3 candlestick pattern. So first candlestick is lower, middle one was the biggest, and third one is again lower, which is perfect ERL for us. And then we are waiting to get inside of this IRL. What I would recommend you to do is take this Genbox, or Fibonacci, however you want, and look if your FVG is in like discount premium zone. That's like really important to know, and to use the main one, which is this one. Of course, it also depends how you place your stop loss. You can place your stop loss on like less tip of FVG and aim for above, depends on how you want to trade it. I usually go for lower time frames, 1, 15, 5 minutes, but trust me, there are much more time frames, which I will be explaining later on. So you can clearly understand here, ERL, it's taken. Right now it's taken. Price rebalance to IRL, FVG. So this FVG. And then when it's IRL tapped, price seeks for ERL again. So it's all in the circle. If ERL was taken, we need to go for IRL. If IRL was taken, we go to ERL. Basically, simple thing you need to know about internal versus external liquidity. So for now, that's it. Let's just move on to time frame. Now, as I was speaking about everything or about liquidity, external, internal, etc. Now time frame. You cannot go like different time frames because then it's not gonna work for you. To use liquidity effectively, time frames must be on. So if you have monthly, daily, bullish, you will not go on 1 hour and entry on 5 minutes when these boats are bearish. So it's 50-50 basically, but in trading it's never 50-50. Anyway, so let's go for example to monthly. Just a second. Okay, so monthly is bullish. Okay, then we move to daily, and then we see the daily is kind of bearish, but it's recovering here, which is bullish, but we are still waiting for this retest and to move on. Then you have 1 hour. As we can see, our is not bullish, sorry, what am I talking about? Okay, it's bullish. As you guys can see, market structure, it's basically a bullish. And then we go on 5 minutes and wait for our entry. Now this one was entry on 4 hour, but anyway, you can look for it in here. So what I would look usually is going like into this fair value gap. I would look for what is called market structure shift. So look for confluences. You have market structure shift, SMT or smart money tool divergency, or you can use kill zones, London or New York, depends on what do you trade. If you're on smaller time frame, I would recommend go into, like for example, when it's aligned with London or New York kill zone. So that's the main thing what I'm looking for. Usually I only trade London, sometimes New York. So time frames that you should be using. So first time frame would be monthly. Okay, so you have monthly, then you have daily, and then you have 1 hour. Oop, sorry for drawing badly, but and then entry was on 5 minutes. Okay, so second one is weekly. So weekly to 4 hour to 15 to 30. So 15 to 30 minutes entry. Then you have daily to 1 hour to 5 m. As you guys can see, we have like on both same thing, but I usually go with this one because for me it's the best and simple way to lock in with trading. I do not like to use a lot of them, but daily and 1 hour is perfectly combined. So what I'm looking for is, so daily I'm looking for bias direction, then 1 hour for FVG or usually external liquidity, external or internal liquidity, how you want to call it, and 5 minutes I look for market structure shift inside of kill zone, London or New York. My best tips for you about time frames is do not trade against higher time frame bias. Use higher time frame for direction and lower time frame for entry. So if I have bullish on daily and my 1 hour is looking kind of bearish and I will go, for example, bearish, I would look for alignment. So daily must be bullish and 1 hour should be bullish, but what I will be looking is for external bullish liquidity. That's it. And 5 minutes would be entry with market structure shift. Basically that's all you need to know about time frames. Now let's explain it when I put it all together. So right now I found one example, perfect example how it works. We have swing high. Okay, so we have right now swing high. I mean, we are showing that we stopped going lower, and this is for me ERL, which is external range liquidity. Then I will, from daily, I will move to 1 hour. What I'm looking for 1 hour is in daily swing, I'm looking for FVG, and there is a perfect FVG here. which is basically the biggest one here. And right now probably you're asking, okay, I will enter here and then to external I would not get in, which is not true. This is the other tip that I like to tell people. I like to see grab of liquidity inside of FVG. For example, this one was not grabbed, so I would just forget about this trade and just move on. Maybe some other pair, which I'm using only 4 pairs, will give me some kind of example of entry. So right now, as I can see, we took this liquidity, and one tip of this liquidity is also I have three candlestick patterns. The middle one is the biggest one, and as you can see, we have here like sell side liquidity taken on 1 hour, and after that we are looking for 5 minutes entry, which is market structure shift plus FVG entry, usually how I use it, or you can use it however you want with order blocks. So first of all, I just want to go on order. I just want to show you what I meant when I said there is no market structure shift here, because this is mitigate, like looking for it, it's something like mitigation block, but this is not market structure shift. For market structure shift to be correctly done is to take low and then go above, take FVG and move more above. That's normally how market structure shift is working, and here I don't have that. Now when we move on with daily, few days later on, we see how we took sell side liquidity here. And what can you see here? Here you can see we had a great market structure shift. So for example, we are moving downside, making swing lows, swing highs, swing lows, swing highs, swing lows, and then we pushed above, which we broke last high. Now first of all, we took liquidity here also on smaller time frame, so 5 minutes, and then sorry, I typed 5 minutes, I don't know why, but it's liquidity anyway. So we took this liquidity and then we pushed above previous high, so we stopped going lower and we changed direction, which is market structure shift. After that, I'm looking for fair value gap. Usually I don't go for lowest fair value gap, I go for around market structure shift, and as you can see, small one is here. Now what you think, I will be placing my entry here, which is correct, but my stop loss will go always down to this fair value gap, and my TP would go to this high. As you guys can see, it's 6-hour trade, which is like long period of time. This is my swing trading strategy, and this is how I use external and internal liquidity. So when I look on daily, it's correct trading system. Here was same thing. I did here trade before, like in November, that was a long time ago, and here was the second one. It was like 1, 2, 3, 4 days trade. Anyway, but it was a successful trade and I really liked it. So this is it. I will just close with this. Buy side liquidity / sell side liquidity, it's a stop hunt. RL, ERL is draw zones. Use higher time frame for bias, lower time frame for entries. Only buy at discount zone, sell at premium zone. Patience plus execution / edge. This is all you need to know about liquidity. Pretty simple explained and pretty simple done. If you need any more information about it, please do not hesitate. You can always come inside my Discord community for free and book any call, any session with me. I'm doing it freely, and I really don't charge like 1 session, 2 sessions with some random people, because I like to help people. So that's one thing. If you want, you can pay and join my community. If you don't, I'm all set. Also, you can ask for help. So thank you a lot, and if you want to join, it will be inside of description. And that's it for liquidity. I hope you use this information good, and good luck with your trading journey too. Thank you and bye.